All right, what up? What up? What up? Top G traders. We gonna learn. We are going to learn. We're going to learn and learn some more. All right. So what I will be going over is basically the trades that we always take. We have to keep this very mechanical. And if you're gonna learn how to trade, we got to make it simple for you and transparent enough so you can do it on your own. So I always like to come to EU. EU is an easier pair to trade. All you gotta do is really know what the dollar is doing, and euro is gonna follow whatever the dollar is doing, right? All right. So obviously, what we're gonna be learning is high probability trade setups. It's all gonna be high probability. So since euro um, is on a downtrend, we're not looking for a reversal. Now, check this out. This is technical and fundamental put together. Fundamentally, the dollar. This is why I look at Bloomberg and all that stuff a lot. The dollar has higher interest rates than the euro. The euro is more likely to go into a recession than the dollar. I don't know if people were, you probably have been looking at CNN, but the euro is more likely to go into a recession. Okay, so since we can look at higher right now, I was gonna go and look at higher time frames, supply and demand, because we're trading high probability supply and demand, and that's it. We're not doing anything else. We're gonna keep it really simple, and that's it. So let's start where we at right here. We see the market is just pushing down, right? You see it just pushes down. This is where we're at right now. Now, let's say we're looking for a trade for euro. We got one, two, three. See the blue candles? One, two, three. We have three supply zones. Supply zone number one. And the supply zone is basically it's the last, it's like if the like this right here, this whole thing right here is probably on a higher time frame, a bigger supply. So yeah, see right there, that's a bigger supply. So the next time price comes back up there, it's just going to reject it and go down. And now, and at this point, and I'm glad I'm doing EU. All of this is uncontested. We're not going to go for a lot of taps on the supply or demand trades, and that's what makes them high probability. We're going for first touches, and that's it. So we got two supplies on. We have three, and we don't want to get. What end up is going to happen is this: when we come up here, we'll sell. We'll get a short trade because it's probably going to do something like this and then fall again. And I already went over this with myself. But ultimately, what we're looking for is for it to come up here to this one and then fall off the cliff. That's basically what we're looking for. Very easy, very simple. So this is on the bar replay. So let's check it out so we can see what we're gonna do. H4 action. All right. No, we missed it that quick. See how it came up to that zone that quick and it dropped, but it didn't touch it. So I wouldn't have took the trade right away. So let's keep going. But it was in that area. You see how strong these areas are? So now it's coming back up. I don't even care about the buys. The market sentiment. See? Now, this is what I meant by as soon as it got into that zone, I would have went, first of all, I would have scaled down. We'd have been scaling down to a lower time frame, right? And if we want some quick and easy pips and be out of a trade, I probably would have took it to right about there. So we're getting quick and easy pips out of this. So we would have been in the trade. Let's make this a little fast. And look, we would have been out the trade on the 15-minute. We went to the 15-minute, we out that trade. Right? Let's go back to the hour because it looks funny. But see how it went? It created, this was the supply zone. And we're not going to be too confused about supply zones. It's really supply and demand. It's just where the market pushes up. We're going to put a volume. We see we don't need a lot of indicators. Now, see how it was high volume right there? It came up there. High volume right there. You want to use the volume indicator to see where these high volumes. There was a lot of volume in that area. Now, see, when we scale, see, we was on the H4. But see, when you scale down to the hour, here was an hour supply right here. That was an hour supply. And it came uncontested, high probability trade right there. So we would have, let's back it up for a moment and see, let's back this up for a moment. Can we go back? Yeah, we could go back. So on the H1, this is high probability. The market buyers tried to get into the market, and then the sellers flush the market down. So at this point, this H1 is an uncontested supply. So if we saw this during our, times that we're looking for trades, we'd be like, okay, right here, we're gonna wait for it to get right here, and we'll get like, you know, whatever risk to reward we're looking for. And as soon as it got up there, because I would have known, got up there, tapped it, and we would have held that, and we'd have been out that trade that easily. I guess I didn't go to the H1 to see that because I was looking at the H4, which is perfectly fine. So now that H1 is hit, it's uncontested, it's hit. I ain't worried about it no more. It was the high probability of the uncontested areas. These three are the last uncontested, meaning price has not came back to retest it yet. So these are the trades that I'm looking for. So now look at that. We would have got in right there. Short stop loss, and see, I would have had it like right here, just enough to give us some good money. So we would have already been damn near outlet. We would have been out the trade right off that move right there. We would have been out of that. So now that has been uncontested. Now that this is tested again, now it would be a second test if it comes back up here. But I'm looking at this. This makes it high probability. Obviously, we had a gap right here. This gap had to be filled. This move off the H1 filled that gap, right? This move filled it up some more, but we still got gaps right here. So this lets me know that eventually this area will be broken. So I'm glad we got the trade off of that. I ain't finna worry about this trade no more. Now I would be waiting for these gaps to come to fill in this area right here, right? So honestly, you can put a sell limit up there, and that's sometimes I do that. I put a sell limit up there and just let it tap it and then let it drop. So this is uncontested. We have gaps right here and right here that need to be filled. These gaps have to be filled. So now I'm looking at it like if I gave this trade out, I'd be like, hey, traders, we'll be waiting for this move to happen, right? Let's wait. If you want to put a sell limit there or you want to just wait and we'll just get in. And as soon as it get up there, there's two ways of getting in. We can get in aggressively or we can wait for like how I want to give an example of a non-aggressive way of getting in. I'm going to show you after this trade. So let's see. All right, so look at that. And that's what happened during the news. It came all the way to the zone. It filled all of these gaps in. You got the sell right there. And look at that. I don't know how many pips. Let's see how many pips that was. That was 114 pips. But I knew that the gaps needed to be filled. So basically, this is what we want to, this is how all the trades are going to be. This is how I'm going to teach in this with this group how to look only for high probability trade setups. We don't care about anything else but high probability. What makes it high probability? That's step number one: gaps or imbalance. Hopefully I'm spelling it right. The gaps and imbalance, these are the after the market flushed the price down, we're looking for these gaps to be filled. As you can see, it got filled. And then we want to see, okay, as there's gaps, where are supplies? Supply right here, supply right here. All of them, we got beautiful trades off of them. So the imbalances and the gaps are big time. And look right here. We do have a gap right here too. So eventually that's going to get filled too. All right. So gaps and balances, imbalances is the first one. All right, so the second one, let's make it the same color. 20, put it right there. So the second thing, like we said, we're looking for high probability. We're looking for what the if it's a downtrend or uptrend. We need to see what we're looking at. With Euro, EU, there was a downtrend, so we're not taking the buys. We're looking for those sales. Those buys, you could take them, but them all retail traders. Retail traders would have been taking all them buys right there, and they would have got toned to bits. And we're tired of trading like that. We don't trade. We don't want to trade like that. We don't trade how the banks are doing. The banks are making these sales off of these lines. Like retail traders are putting these buys in, the banks are coming and flushing all the retail traders' money out. We don't want to trade like that. All right. So if it's on a downtrend or uptrend, and where are the zones? Supply and demand zones. Once we identify that, then we wait for uncontested zones to be hit. That's all we're doing. This is what makes it simple about trade and supply and demand. Looking for the gaps, seeing if it's on a downtrend, it's on a downtrend, so we know these gaps need to be filled. We could have bought, sold right there, made money, and we knew after this was tested, then this gap probably needs to be filled. So we're not worried about this supply no more. And you see how it blew past the supply, but honestly, if you really look at it, not only did it blow past the supply, it went and tapped this supply first and then closed below this supply and then dropped. So it really, what it did is, if somebody put a sale right here, let's say we went in for a sale right here, we got stopped out of that, because you have to look before you go and looking for a trade. This is why this one was important. Take this one because it's going to react because it's uncontested. But the second time when there's a gap up here, this is the one you want to take, not this one anymore. You have to be smart about that. The market will kill you with supply and demand. You don't understand that there's gaps. So now the next time it come up here, it might okay, it's going to be like this. This is what it looks like it's going to happen if this continues. We'll have a wiggly come up here. We probably get another sale, and then it's going to blow past this. It's going to go like this and come up here, sit up here for a second, then fall. Then we could take this sale off of EU. We could take little scalps. You can go on lower time frame and take little sale scalps off this supply, and maybe this, because now it's below this supply too. So we could take little scalps off of this too, this supply. But other than that, this, you already know it's gonna come fill this gap in. So let's just be anticipating for the bigger sale that's gonna come from EU. And obviously, remember, when it comes to reversals, guys, hear me out. When it comes to reversals, that you're basically saying that the dollar interest rates are gonna start declining, and then euros interest rates are going to start doing better. In order for us to spot reversals, We're going to have to go on a higher time frame and look at this on the higher time frame. Does this look like it's going to be a reversal anytime soon? This is just up, down, up, down. Let's just keep following the trend until it tells us it's going to do a reversal. Just keep following it. You know, right here was a major demand zone. It got broken. See, it like if we put that in, and then there'll be that last zone to be right there. It tapped it, and people were buying, but it broke it, retested, and turned it into a supply, probably on a lower time frame somewhere. It was a supply right here. Let's see. Yeah, there you go, right there. See the supply? Once the market broke it, broke structure, came back, filled the gap, and just rocked itself down. And EU is gonna just keep going down until we see what I would like to see is, as far as reversals, because we're gonna stop reverse trading. We're gonna go with the trend. This is what I want to see in a reversal. So comes down to the zone, sticks there. You know, you see your divergence, and then you start seeing this, and then it comes pop its little head right here one more time, and then pop one more time right here, and then we'll start catching reversals like that. Like, but it has to be a strong area, and then we'll take the reversal. But until then, hey, we riding down with EU or whatever we're looking at. So that's basically how how my signals are gonna be, and how we're gonna look at the market. We're not gonna look at it any other way. I mean, obviously, you can use use tools like putting the trend line in will help you out. Very, very much so. You see that it still has time to go down. That's probably still going to come down and bounce, and then keep bouncing until it breaks out of the trend. But hey, got plenty of time for that. So that's high probability. But we're gonna eventually. I'm gonna end this video, but I'm gonna say this last thing. We're gonna eventually start taking high probability M5 trades. And what I mean by M5 trades, let's go to something like, let's go to GJ. People love GJ. We'll go to GJ and see. Let's look at the weekly. The weekly is bearish, right? Monthly bearish, weekly bearish. What are we looking for? Sales, right? The daily is bearish. H4 looks funny. EU looks very funny. So very much so. Let's go to the hour. When, like, after this, see this push up right here? This push up was because of this bigger giant supply right here. Very big giant supply right here. You see it? Market was chung 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 doom sell. That was the uncontested. There was a high probability trade set up right there. That's why it dropped. So honestly, that would have been great. But let's do this last thing. We don't want to make these videos too long. So if you saw this and you knew it was coming up to supply, right? So let's H1, right? So it comes up to the supply, right? Ah, I think I need to go to a lower time frame. Let's just go to a lower time frame and do this. So it's right here, and you like, okay, it's got to come up there. So let's do it on the M30. M30 is a really good one. So it drops down a little bit, and it flies up, right? I'm gonna have to go so down to the M5. We're gonna go to the M5. All right, so you know your zone was tapped. You're on the M5. M5s are great. So I would have sold right there. I have a template for 1-to-1. Or you would have been out the trade, honestly. But let's see if you template for 2-to-1, you could have been out of that. Just GJ. So the best thing to do is have a hard stop above the zone, and you have to look at M5. Here's a good place to get out right there. Here's another good place at the lows. Always get out at the lows. So this could have been your potential trade right here. Let's say you risked 1% on your prop firm account. First of all, you've been up already. You've been already up 15 pips off of one move. On the M5, you're going to come over here to the M5 on H1 supplies. Get in. TP1 right here. TP2 right here. TP3 all the way down here. But there was news. And news, we're going to have videos on the news anyway. But look at this. So you would have got in. You had this small stop loss. And look at this. You would have been happy. You would have cleared your account. Talk about clearing a prop firm account. You're out the trade. You know what I'm saying? Stuff like this. You know it's coming up to an H1. So you come over to the M5 and you get your setup off the M5. And a lot of the trades will be like that. You know, I'm gonna be giving out like 6 to 7 trades a week. The reason why I say that, you don't want to over trade. 6 or 7 trades a week is fine. That's actually too much. Maybe 4 to 5. The least amount of trades, the better for me, because we're looking only for high probability trades anyway. We're not looking for every trade. Every trade ain't good for me. I need high probability, and that is how it's going to be, and this is how I'm going to teach it. So with that being said, I will see you guys on the next video. Peace.